Today, I have the pleasure of speaking to Anna Tolentino from Main Street Home Loans in Ashburn, Virginia.
Thank you for having me, Wanda.
Yeah, absolutely. I'm so happy that you and I get to talk about credit scores today because I get a lot of questions about it from my clients that are immigrating to Virginia and that has never had a credit score before. I also work with a lot of first-time home buyers that are just starting their journey and they want to know what they should and should not be doing with their credit scores and what lenders are looking for. We also share a passion of helping young women, single moms, and women in general to reach financial security through real estate investment.
Yes, it's very important because that is a big part of building generational wealth
Right.
and building wealth in the United States.
Exactly. Exactly. And you're also a little bit of a credit score geek because I
Yes.
saw you talk at the
Mm.
presentation at Remax Gateway, and I thought this is a strong young woman that I want to work with and I want to interview. So tell us a little bit about yourself and what you do.
So my name is Anna Tolentino, as Wanda had mentioned, and I have been doing this for 17 years. And I specialize in helping first-time home buyers and repeat buyers in accomplishing their dreams of home ownership. I'm fluent in Spanish, so I'm able to help, especially the Hispanic community, understand the process and understand from A to Z, which is what you and I work hand in hand to do, is to help buyers from the beginning of the process to the end, helping them understand every aspect of it. And so it's something that I love to do. I myself own a couple of properties and I'm beginning to create wealth for my daughter. And so I would love to help other people do that also.
That's awesome. Yes. So tell us, what is a credit score and a little bit about how it works?
A credit score is a numerical value that tells the bank or lender of a mortgage the likelihood of you paying back the liability, which means the loan. So the higher the credit score you have, it means that over time you have paid your liabilities, your loans, your credit cards on time and have paid them back as you had promised. A lower credit score tends to say that you maybe haven't paid them on time or have had late payments or haven't paid certain responsibilities. So lenders look at that as the way to gauge whether you are a good candidate for a loan.
And how would someone that has never had a credit score establish that?
So one of the best ways to establish a credit score is to open up a secured credit card. Many institutions that you hold your checking and savings accounts offer these to their clients. And basically a secured credit card is held against your savings or your checking account. And you're given a line somewhere $250 to $1,000 depending on the bank's comfort level. And then you use it as a credit card and you pay it back. And that begins to establish your credit. After about 6 months of having that card, you will have a score, which we use the FICO 5. And that score will then tell us whether you are paying your credit obligations on time or whether you are not. And that's what we will use to dictate. The longer the score has been working, for example, the longer you've had a credit card, a car loan, and you've paid on time, the better your score will get.
Where do they start and what should they do and not do when they do have that credit score?
You always want to pay on time. That is the biggest thing because that is a big part of how your score is calculated. Another thing that you want to do is to make sure you don't charge more than 30% of the
yes.
credit limit, because if your cards are maxed out or very close to the limit, that will pull down your score. Because the credit bureau, when they take that into the risk analysis, they say, if this person were to lose their job, will they be able to pay this debt off as easily if it's maxed out? And so we always recommend that you try to keep your balances at below 30. If you have to go to 50 because you had an emergency, then that is honestly the most that I would say try to charge your card. So what that means is if you have $1,000 limit, try to keep what you charge on a monthly basis under $300 and no more than $500.
And so a good credit score will be more than 620.
So a good credit score, the best pricing you're going to get is going to be 760 and above. And the lowest that we tend to go down is a 580 credit score.
And that's going to influence your interest rates that you're going to
Correct.
get.
Correct. So the higher the interest rate, the lower your credit score. The higher your credit score, the lower the interest rate. And that is because the bank uses that credit score as an indicator, as mentioned before, of how creditworthy you are. So if you have a great credit score, you're less risky, so the bank will charge you less.
And you've said before that 6 months. How long do you need a good credit score before you can buy a home? What do lenders look for specifically?
So we look for a score, but more specifically, we make sure that there is some substantial credit lines. So what some people tend to do is they put themselves as an authorized user on someone else's card to get a score, but unfortunately, that's not a valid score for us because that card is not. You're not liable for that card. You're just an authorized user.
Mhm.
So we want to see that you've been paying on time for 6 months to a year minimum. Sometimes the programs will allow the 6 months. It has to be run through an automated system, and that will tell us. And sometimes it will require the full year.
Great. Well, you and I can talk for hours about this, and we should definitely do this again. But I have one more question for you.
Sure.
Fannie Mae brought out this program that said that your rent is now going to count towards your credit score. Can you tell us a little bit more about that?
So the rent is going to be used for the underwriting aspect, which means the approval process to validate whether you can handle the payment and whether you have paid your housing/rent on time. In other ways, also, you can have your rent payments added to your credit report, and we can get that information over to you on how to do that. And that is going to now help your credit score because it's going to be another line that's being reported on your credit report.
Well, thank you so much for sharing all your knowledge and information with us and resources.
Thank you for having me.
Absolutely. I'm going to post everything in the comments below. And if you have any questions, please reach out either to Anna or to me. And thank you for watching.